Hello everyone and welcome back. So, as you may know, the market is in one of those phases where things look confusing on the surface, but underneath something big is building. So in this video, we're going to be breaking down what's happening and get you guys on track. So first things first, let's talk about Fed. So for those of you that don't know, here's what's happened. The Fed just held rates again, and now that's 2 meetings in a row with no cuts whatsoever. And here are the key parts. They're not rushing to cut rates, inflation is still a problem, and energy prices, especially oil, are rising, which basically means inflation isn't going away anytime soon. And now the part that gets interesting is even though the median rate path didn't change, more Fed officials are now expecting fewer rate cuts. In translation, this would mean that the market was hoping for easy money, but the Fed was like, nah, not so fast. And that is the kind of environment we're currently in. Money is tight and everyone's trying to figure out where the next opportunity is. And now we're going to look at how the Fed is really stuck. The Fed is currently stuck between two problems: inflation and a slowing economy. On one side, oil prices are rising higher because of geopolitical tensions that pushes inflation higher. And then on the other side, higher rates hurt spending, hurt employment, and slow the economy. So what do? But realistically, there's no perfect answer to this question. Powell even said it straight. If I don't see progress on inflation, you will not see rate cuts. That tells you everything. The priority right now, control inflation first, even if it means keeping things tight longer. Now, this is where it starts to matter for us, because markets don't move based on hope. They move based on liquidity. And as of now, liquidity, as you may know, is still tight. So what happens when rates stay high? Money becomes expensive, capital flows into safer assets like bonds, and risk assets like crypto get pressured. We've mentioned this before in many other videos, so if you've been keeping up, you'll know exactly what this all means. And that's exactly why, as of Bitcoin, we're seeing a weak upside, choppy price action, and increased volatility. But here's the nuance most people miss. This doesn't mean the market is over. Historically, phases like this are actually accumulation phases. And if you don't know what accumulation phases are, this is where liquidity is tight, sentiment is uncertain, and smart money starts positioning quietly. Because eventually something does end up breaking. And when it does, the Fed will have to step in again. More liquidity, more support, and well, that's when markets will really start moving. But do remember this: markets don't grow because of rates, they grow because of liquidity. And right now, we are in that transition phase. All right, now let's get into what's happening with Bitcoin and Ethereum. So, yesterday we got confirmation below a key level, breaking Monday's low. That's important because it confirms a higher time frame bearish structure on the daily. So structurally, we're bearish. Let me show you guys exactly what I'm talking about. Right now, the price is just correcting that last move down, and it's still inside a resistance zone, and that is around 70.6k to 70.2k, as you can see this box here. And this area is acting as a fair value gap. And based on how price reacted here before, continuation lower is the most likely scenario. So our short-term target would be 69,150. Yeah, so it's gone past that 69,150. So the low of that price was around 69.50. So now the next levels that we could watch for would be 71.5k to 70.8k. And downside targets would be 68,900 and $65,000 target, which would be the main target for this. And as for Ethereum, we could expect the price to continue that bearish movement down to a price of around 2,100 to 2,090, where that would be our resistance level. And then we could expect the price for a reversal we could expect a reversal from that price for it to come back to that key level we have on our chart. And then finally, we have unemployment claims. So So, what is to be expected from this? What we'd expect would be more volatility and potential further downside pressure. So, when you combine all these things together, it would look something like this. The Fed is staying tight, inflation is still being a problem, and liquidity is not turning yet. And bearish market structure in the long term. You get exactly what we're seeing now. So, in the short term, pressure remains and volatility continues. As for midterm, once liquidity returns, crypto will likely be one of the first markets to move. And this phase right now, it's not the end, it's the setup. So yeah, things might feel slow, messy, and uncertain for now, but these are phases where the real positions happen. If you understand this, you're already ahead of most people in the market. So if you found this helpful, drop a like, subscribe for more breakdowns like this, and let me know in the comments. Are you bearish right now, or are you already positioning for the next move? Thank you for watching, and I'll catch you in the next one.